For the past several months, the world has been looking at the Strait of Hormuz as perhaps this great gateway for the energy sector. There's been back and forth rhetoric from both sides. The Americans have their own interests as well as the Iranians and Iranian allies, such as the Chinese and the Russians, for example. But something bigger is now happening, and this is what I want to unpack today. What I want to unpack in this week's episode of the Christian Black Report are what would happen in the event for a formal or permanent Hormuz closure. For the past several months, we've seen the Strait of Hormuz has pretty much been blocked by the Iranian regime. It started out as a standoff between the U.S. Navy and the Iranian IRGC, and we're kind of seeing the gradual breakdown. I say gradual but volatile breakdown. And what I mean by that is we're seeing these peace deals from both sides proposed, and they keep getting rejected. There seems to be some back and forth in terms of what both sides, when both sides are either accepting, rejecting, and they tend to be because of minor clauses or different clauses within the proposed agreement. So stay tuned this episode where we're going to unpack this potential permanent closure of the Strait of Hormuz in more detail. If you enjoy this content, don't forget to like, subscribe, to turn your notifications on so you never miss an episode. Give it a little bit of context for those of you. I'm sure most people listening to this would already be relatively aware what's happening in the Middle East. There was the ongoing conflict in the Middle East between the Israelis with Hamas and Hezbollah, and then that kind of escalated into Iran attacks from Iran. This prompted the U.S. under the Trump administration 2.0 to attack Iran with the Israelis. This led to this sort of ongoing conflict that we're now witnessing open conflict with the U.S. and Iran, something that I don't think people before this would have really expected. But I think there's a bigger picture of what's happening behind the scenes and what's unfolding before us. I mean, just to give a bit of context, the last time we've seen major Western dominance in the Gulf states, the Gulf arena, without the direct, approval or direct invitation by Gulf states such as the UAE, Bahrain, Qatar, Saudi Arabia, and Iran. You had the Seven Sisters, which were essentially seven energy giants in the Gulf states, which were owned predominantly by the British, along with other Western powers. Other Western powers, and these companies were not necessarily national companies. They were more private corporations that controlled energy in the region. Then with the Arab Spring and the founding of OPEC in the early 1950s, you saw the nationalization in the Arab world of the energy and critical mineral sector. More recently, the critical mineral sector, but energy to start with. I say critical minerals because the Saudis themselves have been diversifying, and there's no doubt the Iranians are also looking to diversify internally. But I mean, that's not really a discussion for today. And this entire scenario boils down into two things. It boils down into who is incentivized by the continuation of war. What are the for and against reasons of their? I mean, what are the pro and against arguments made by these allies of Iran? But there's something bigger and broader going on here. Is the U.S. under Trump, actively looking to reassert U.S. dominance in the region. We saw this with Venezuela. Now U.S. companies practically control the energy sector of the world's largest proven oil reserve holder, 303 billion barrels. And that's coming directly from statistics you can find online. pretty easily. And there's a broader picture here. The Iranians are threatening to close the Strait of Hormuz permanently. And well, before I dig into that, just to kind of give context to my argument before about the allies, and this will lend itself into the broader discussion of what a permanently closed Hormuz would look like. But just to kind of think about it in terms of the ability for allies to get energy out of the Gulf states. And Iran in particular predominantly exports its crude to China via shadow fleets. And I know, and for those of you that follow my newsletter also, there's some sort of an incentive from the Far East to encourage Iranian dominance over the Strait of Hormuz. And I guess de facto Iranian dominance over the Strait of Hormuz. The Strait of Hormuz is still governed by Oman. It still has. There's Oman. There's the UAE that also sits on the Strait of Hormuz. You have the Saudis who are again are also in the proximity of the Strait of Hormuz, and with the Iranians. And it's almost like the Iranians on one side and the rest of the Gulf states on the other side in terms of geographically where the Strait of Hormuz sits. The Gulf of Oman and the Persian Gulf. Sorry, I was thinking Arabian Gulf, but then I thought there was another name, Persian Gulf, and the UAE and Oman on one side, and you have Iranians on the other, and then of course the Persian Gulf, or the Arabian Gulf, you have Qatar, Bahrain, Saudi Arabia, Iraq, all kind of sharing, and Kuwait as well, all kind of sharing these borders on that. I mean, coastlines with Iran on that. In that Gulf, but then on the Gulf of Oman again, you have Oman. Again, there's sort of an incentive, but there isn't, because the Iranians, in controlling, if they were to shut this down, they would effectively control the strait. So they would be the ones that would be able to control who goes in and who's out. And I want to clarify, when you see these headlines that talk about, these more recent headlines that talk about the formal closure, what they really mean fundamentally is not necessarily that there will be a permanent closure in the strait that no ship will ever pass through. What they really mean is that the Iranians, the IRGC, will control who goes through. And that's really what's at stake here. If they control through, they can still get their Chinese crude, their Chinese destination crude out of the strait. It will just mean that destinations they would control, that ships going towards Western destinations or unfriendly or unallianced destinations where they're not aligned with would simply not go. And this would pose major systemic risk to OPEC. Gulf states that do not align with Iran politically or policy-wise, politically-wise, or geopolitical-wise, they are not necessarily, I mean, Iran's not necessarily going to play ball and let them through, which could, we already saw the 1.5 million barrel per day deficit in Iraq crude reported months ago in the beginning of 2026. And again, I cover that in my article, and I'll drop the link to my newsletter below for those of you that want to go scroll and find some of my past research on this. But there's something funnier here happening behind the scenes, and I think that it deserves a bit more of a note that not all Gulf states are incentivized. There's the Farajia pipeline that's being built in the UAE to bypass the Strait of Hormuz. This would basically render it unnecessary for the UAE to have to worry about dealing with IRGC blockades or permanent closure. It would bypass the Strait of Hormuz, go straight from essentially they could transport oil from within or from the Persian Gulf through the Gulf of Oman. This would also be a potential revenue stream for them if they have a working pipeline that can transport crude. Imagine the number of Gulf states that could probably try and use this. Foreign companies that want to get their energy out of the Gulf states, or they want to transport energy between the Gulf of Oman and the Persian Gulf. The amount of the geographically speaking, the UAE is poised to make a lot of money off a potential permanent closure. The Saudis again, they also have an incentive here to see the Farajia pipeline succeed. Last time I checked a couple weeks ago, it was more than 50% complete. Now let's talk more about what would happen I want to go bit deeper into what would happen potentially if there was a permanent closure in the Strait of Hormuz. And there's a lot to say about how geopolitical risk is priced in, but I think something that this war has done is desensitize markets to the geopolitical risk. I mean, if you just look at the VIX index, the implied volatility on the broader equity market. And I think we see a bit within the VIX alone, we're seeing a bit of subdued volatility despite the constant geopolitical risk premium, or what we're witnessing in the Strait of Hormuz. And I think a large part of these big upswings in geopolitical risk is coming more in the physical supply chain and less so in the capital markets. And I think part of the reason why the capital markets are seeing more subdued volatility and less of a more volatile swing, fewer volatile swings has more to do with complacency from the investor standpoint, complacency from people actively in the market. People that buy and hold, investors are not going to just sell off. It's what you're witnessing when you see these sell-offs or these buy-ins in large quantities. And rapidly, you're seeing a lot of these as high-frequency trading, algorithmic trading, people, swing traders, day traders, people that are using leverage to try and take advantage of large swings. And again, this complacency among the investor class that we're witnessing through the VIX index is kind of a hint as to how the market psychology is reacting to the current situation, but also it's very telling as to where this is all going in terms of market. When I remember when this first came out, a lot of people would go on and on about, this is going to destroy the financial markets. We're going to see a crash. There's a lot of equities are going to be impacted because the supply chain. And I think the market's truly pricing this in. This is becoming priced into the market, and it's not necessarily going to cause a broader long-term issue. Thanks so much for tuning in. If you liked this episode, don't forget to like, subscribe. Also, check out the link will be down below. But my first published book, I wrote, for those of you that follow my content online, my newsletter, a big topic I talk about is investing, and I believe that financial literacy is one of the most important subjects that children should be learning in schools. Following my belief, I put together a children's book that's meant for ages 7 to 10, and it talks about basic concepts of revenue, profit, break-even point, how to start a company, and I believe these are subjects that should be taught from a young age. So check out the link below in the description, and thanks so much for tuning in. All the best. Bye.